Is the market overbought and destined for a pullback, or did the Fed just ignite the next leg up in the market? Let's dive into it and find out exactly what's going on. So a lot of people coming into this event were thinking down. However, the move that happened after the Fed wasn't so phenomenal in the S&P. We're going to get to tech in a minute, but it wasn't like it was lights out, fireworks, explosive in the S&P itself. On Wednesday, we got to a high of 66.24. We closed at 6,600. On Tuesday, we got to a high of 66.26, closed at 66.06. Thursday was sort of a quasi-flat day. We had a high of 66.56, closed at 66.31. And then Friday, we had a little bit more of a continuation. This is not a rip-roaring move by any stretch of the imagination. The market is not yet in nosebleed overbought territory. However, there could be a retracement. It's not going to be very deep because obviously we're not so stretched that the retracement should be deep. However, with that being said, there is the potential for the market to keep going. 6,700 is obviously in the sights for this week. We're probably going to get to 6,800 by month end. A lot of that is going to be because we have about 7 trading days left until the fiscal year ends. A lot of funds that are based on a fiscal year as opposed to a calendar year are going to get ready to close their books. So you might get a push to 67, potentially 68 just to get the mark and to just get them, and it's also going to be quarter closed. So it's a good way to get the mark and just push the market all the way up to a big fat round number. 6,700 is not as 6,800 is going to be, just because we're at 66.64. So 6,700 is basically a sneeze away. So 6,800 would be a little bit more dramatic, potentially setting up for calls to come fast and furious of S&P targets at 7,000. We believe that with this Fed announcement this past week, that this bulls everybody up and should get those calls for 7,000. I don't think you're going to get calls of higher than 7,000. I think 7,000 will be the most aggressive. I think that you're probably going to be looking at calls for year end between 6,600 and 7,000. I know it's a 400 handle range. I think that's going to be really where people are going to be living. 66 on the downside, 7,000 on the upper end. I think we're possibly going to end the year around 68. I think we are going to get at some point to this 7,000. The part of recession is probably behind us. We're probably what we would now call a rolling recovery. We'll do a video on that at a later date, describing rolling recoveries versus rolling recessions. We believe that the worst is behind us in terms of the economic picture. The only thing that we can foresee that's coming down the pipeline is going to be if inflation picks up, and that'll be with tariffs. So that's yet to be known. However, for now, the path of least resistance is up. Again, we are not by any stretch of the imagination overbought. There's definitely room here for this thing to keep going. We're going to look at tech in a minute. One of the drivers of Thursday, Friday specifically was tech. So we're going to focus there. We're going to focus on a couple of names, and we're going to keep this one a little bit short and sweet. We believe that the market is going to continue in its bullish trend. We don't see any reason why it shouldn't, at least at this point. We have earnings season coming up in a few weeks that will contend with that and see where companies, where they see things going with tariffs, et cetera, et cetera. But that will be again in a few weeks from now. Let's just look quickly at the NDX, see what tech was doing, because tech was really the leadership this week. Whether you had the Oracle news, the NVIDIA news, then there was obviously some TikTok news. So tech was very much in focus this week. We had a gap on Thursday, it was basically a gap and go, textbook gap and go. Tech is looking good. Tech is driving. Therefore, the S&P is following, with tech being approximately 32 to 36%, depending on the day of the S&P. It is by far and away the largest sector in the S&P. So it's going to drag the S&P up. On top of that, the top 5 names in tech are the top 5 names in the S&P. So tech is going to lead. We did a few videos on tech and the importance of tech. One of them would being on the NYSE FANG index. We'll link a description in the video description so you can revisit that. Just understand the importance of what the NYSE FANG is and how that drives the S&P. But for now, just looking out at tech, it's looking really good. There's really not much you can say about it. Is it a little bit long in the tooth? You could make that argument, but the reality is it's not really overbought. It really has legs. 25,000 is probably this week. The way the NDX moves, 25,000 is pretty much in the cards. We don't believe that potentially gets to 30,000. We think that potentially we're going to live somewhere between the 25 to 28,000 range. Obviously, things are subject to change depending on what happens with earnings season. Right now, our base case is 25 to 28. We think that's the target area. And then obviously you have a retracement, but we believe it's 25 to 28. And then we'll see from there. Let's look at some names. One of the names that was really driving things this week, besides tech, was Oracle. Oracle was a big news play this week. Obviously, you had earnings and you had the TikTok news, but granted, it pulled in a little bit. It came in, held the 8, bounced off of it. We got above Thursday's highs, closed above them. This is probably in jeopardy. This high up here at 345.72, this is probably going to get taken out over the course of the next week or two. We believe that that's not secure. We think that the market will find a little bit of resistance at this 320-ish area. We think it'll consolidate and then blast off. We believe that it's going to take out and make a new high here. Again, we don't believe that this 345 is secure. We think we're going to get through it. We do believe as long as we hold this 290-ish area, then even if we base out, we do believe that there will be some kind of continuation play. Oracle doesn't drive the market, but it is a sentiment indicator. It's a big name. Another name that was in the market, we're going to get to it right now, was NVIDIA. NVIDIA had some news, obviously, with Oracle. We held that double bottom low, as we talked about last week. If we can get through Friday's highs, then we think that 180 gets taken out, and that sets us up to start getting back up to the 190 area. We think that it's probably going to happen with ease. NVIDIA is the company's firing on all cylinders. It's the number one stock by weight in the market, and we think it's going to continue to drive the market. Let's look at some of the names. Apple recovered from the news on the day when they released all the products. Recovered, is looking good. You can't say it's not. We're probably looking at this 250 is probably where it's going. And then we'll see what happens from there. Again, not overbought, looking good. Pulled into the 8-day, held, bounced off of it, looking good. There's no problems over here. Let's just quickly, I'm sorry, I forgot to look at this. Let's just look quickly at the Russell. Russell's been in the news. I'm going to go to a weekly for a minute. The Russell has been really, look at this weekly. On the weekly, it looks good. If we go out to the monthly, the Russell is really, looking good. You could make the case that there is a double top happening over here. You could definitely make that case. I would watch it. One of the things that the Russell does signify is risk on, risk off. So at this 2480 area, that's your potential double top. If anything, you could say it's probably even a triple top. So just be aware of it. That's 2480. Russell usually signifies risk on. Let's go back to the daily a minute. If it were to pull back, you could probably buy it somewhere around the 8-day. And if that doesn't hold, you can try and buy it again at the 21. Again, you'd be using the IWM, not the Russell. But you use the Russell more for a sentiment indicator. From a sentiment standpoint, it is definitely risk on. There's no question about that. All right. We talked about Apple. We talked about NVIDIA. Let's just look at some of the other majors quickly. Microsoft, it's okay. It's starting to try and see if it can get through. It's got to get through 520. There's not even an option. It's got to get through this. If it can get through 520, then maybe it will reclaim some leadership status, but it's got to get above it first. That's really crucial for this stock. Okay. Amazon, chilling, not really much to talk about. Really what's just been amazing and just keeps continuing to be a rock star is Google. The stock is just beautiful. There's really, you look at this, textbook gap and go. The stock is looking fantastic. Now, the truth of it is, let's go quickly to a weekly, looking good on the weekly. Let's go to a monthly quickly, looking good on the monthly. There's really nothing you could say bad about it. The only thing you could say is that this is definitely getting a little bit too long in the tooth. That's for sure. And when this comes in, it's probably going to get, this will be your stop one. As weird as this is going to sound, I don't think it's going to happen in the day, but you'd want to see on any retracement, you'd want to see this hold, this gap. If this doesn't hold on any retracement, you're looking for the gap fill. I wouldn't short this. I wouldn't step in front of it for a short. Buying it up here, you're pressing your luck. You're really going to wait for some kind of retracement. It's a little bit hard to buy this. You can quickly Meta also holding. This is probably I don't want to use the word safer bet, but it's probably an easier trade right now than Google because it's not a runaway train. Google is just a runaway train. So you don't want to be chasing. When you're buying this up here, this is a chase. There's really no other way of saying it. You had 2 days of retracement, but the reality is that this is a chase. This is really a chase. Look how far we've come, since the end of August, the month of September. This buying it up here, you're chasing, you're asking for trouble. All right. Broadcom, quickly look at that. It's not as compelling as NVIDIA. NVIDIA looks better. Oracle looks better. And it's not as compelling. It's okay. I'm not going to say it's not. Netflix is holding. It's interesting that beforehand, when Apple was going down, people were hiding in Netflix, and then Netflix was having this monster run. It's almost feel like it reversed a little bit, where people are starting to love Apple again and buy Apple, and they're not selling Netflix, but they're not as aggressively hiding within it, which is interesting. But the stock looks fine. I mean, there's not really much to do here, but it's definitely holding. Let's look quickly at CrowdStrike. CrowdStrike woke up again. I mean, that was Thursday was a stand up and take notice day. Friday we held. As long as we hold 50%, then, which is right around, let's just say around here, this 485-ish area, give or take. As long as we hold that, then this should continue, and then we're looking to take out this 515, 520 area. That should come out with pretty much with ease. 517, whatever. It should come out with ease. ServiceNow, to be honest with you, it's grinding. Let's skip some of this stuff. 975 is your first horizontal resistance. Just think of it as you're expecting something to happen. It could get through it. It could not get through it. You're just expecting something to happen. Okay. Lines on a chart are really there as just reference points for you that you're kind of viewing. The market doesn't have to stop there. It doesn't have to, hold. It doesn't have to do anything. It's just more of like a visual for you to see what's going on. We have written down 975, that area. We're expecting something to happen. What that is, we don't know. If we knew, we would tell you, but we don't. So it could be resistance, or it could just blast through it. So it's just an area that we're keying in on. Let's just look quickly at Tesla, because that's been getting some love. Tesla's kind of back in the game. We took out resistance 1. We took out resistance 2. We're continuing to go, probably looking somewhat over here at this 440-ish area. It's probably the next spot we're probably going to get to. I know it's really hard because you say, well, these lines, like, you're just drawing lines to find places. It's not a question of finding places. What you're looking for is turns. So when Tesla was going up, it had a retracement. When it bounced, this was the turn. Your turn was 439.74, and then we never looked back. So it was almost like a turn in terms of on the bounce. So you're just looking for where the turning points were, and then figure out what happens when we get there again. Is it going to hold, or is it going to act as resistance? Probably not, but it just gives you some kind of reference point that you can lean on, and you can say, I'm expecting something to happen over here. Okay. Let's look quickly at the NYSE FANG, as we would like to. NYSE FANG, also again, driven by Google. I mean, we already went through that. There's a lot there to love in Google, which is really driving this. Last but not least, let's just look quickly at Palantir. Palantir recovered, got through this resistance. Again, reference point, nothing more. The line is not there to stop the market. It's just a reference point. You're expecting something to happen. It was resistance. We bounced. Now we're back above it. Could we get to these highs over here? Again, another reference point up at this, 190 area. Yeah, I don't see why not. It's looking good. Why shouldn't they get there? It's a reference point. It doesn't mean short it at 190 or dump out of it at 190. It just means you're expecting something to happen. We think the market's going to, like we said in the beginning, we think the market is going to continue in its bullish trajectory. There's really nothing here that's signaling for now that something is wrong. Let's just look quickly at the yields. 30-year yields bounced this week. They're not in the caution area yet, so stocks will continue to move forward. The yields are not at the point where it's stand up and take notice, but for right now, they're not signaling anything that should get the stock market nervous, at least not yet. So for right now, there's nothing signaling that the rally should not continue, but we'll take it day by day. We do believe it continues for at least the next 7 business days. Again, one of those primary reasons, we'll end off with this, is that we are coming to the end of the fiscal year. Therefore, there will be a mark, meaning you will see funds, people who do close their books now, looking to mark up their books and get into stuff. There is a chase going on. If I'm not mistaken, I think Thursday or Friday had the biggest inflows into tech, I think on record, if I read that correctly. So there is a chase right now going on for performance. People are trying to get into some of these things. A lot of this stuff is from a Valuation standpoint, a little bit high, but in a momentum-based environment, valuations mean nothing, and momentum will carry the day. There is a chase for performance, especially coming into this fiscal year end, that people will want to mark their books up. Thanks for watching, and we'll see you on the next one.